If you've ever wondered whether you should sell MicroStrategy shares to buy Bitcoin directly, this video is for you. Let's break it down. MicroStrategy has become one of the most fascinating plays in the Bitcoin space. But why is that? Why not just buy Bitcoin directly? The answer lies in what makes MicroStrategy unique: organic demand and strategic leverage. Here's the deal. MicroStrategy owns close to 450,000 Bitcoin, one of the largest corporate holdings in the world. But owning Bitcoin is just one part of the equation. What sets MicroStrategy apart is how it's become a proxy for Bitcoin in the eyes of institutional investors. Let's talk about institutions. Many large money managers and financial institutions around the world still cannot buy Bitcoin directly. Some can't even buy Bitcoin ETFs due to internal policies or regulatory constraints. For them, MicroStrategy offers the next best thing: a publicly traded company whose stock is tightly correlated to Bitcoin's price. This creates massive demand for MicroStrategy shares. But it doesn't stop there. When Bitcoin's price goes up, the value of MicroStrategy's Bitcoin stack increases, which in turn pushes up its market cap. And because MicroStrategy has been added to major indexes like the Nasdaq 100 and the Russell 1000, passive index funds are forced to buy its shares. Every dollar flowing into these indexes means a percentage allocated to MicroStrategy, further driving demand. And that's not all. Bond dealers, who typically deal in traditional markets, have started buying MicroStrategy's convertible bonds as a way to gain exposure to Bitcoin. Bitcoin itself can't sell convertible bonds, but MicroStrategy can. This opens up an entirely new channel of demand from the bond market. Now, let's talk about Michael Saylor's latest move: issuing preferred shares. These are designed to attract money managers who can only invest in preferred stock, creating yet another avenue for demand. Bitcoin can't do this, but MicroStrategy can, giving it a unique edge in the capital markets. Another key point: accounting rules are changing. New FASB accounting standards now allow companies like MSTR to report Bitcoin value gains as quarterly income. If Bitcoin rises, MicroStrategy can declare billions in income, making it more attractive to growth-focused investors. Imagine what this does to MicroStrategy's valuation when Bitcoin experiences a significant price surge. And finally, the big picture. MicroStrategy is not just a stock. It's a carefully crafted financial vehicle that brings Bitcoin exposure to every corner of the capital markets: equities, bonds, preferred stock, and even future dividend strategies. This is the genius of Michael Saylor's strategy. He's not just betting on Bitcoin. He's creating a system where the demand for MicroStrategy shares grows exponentially as Bitcoin adoption increases. So, would I sell 100K in MicroStrategy to buy one Bitcoin? Absolutely not. MSTR is designed to outperform Bitcoin by leveraging market dynamics, institutional demand, and strategic financial instruments. It's not just a proxy for Bitcoin, it's a multiplier.